Well, Sol Eslake is a name who has been around in the economist and economic expert world for decades, and he joins me now. Sol Eslake, good morning.
Good morning, Fiona. You make me feel very old.
Well, I'm sure your name is very recognisable to many. Um, what do you make of this decision? Is it the right decision to change the stage 3 tax cuts?
I think it is on balance. I mean, there's no argument that the government has broken an election promise, a promise that it repeated many times, but there are legitimate arguments for having done that. As Ms Chester was just saying before, circumstances have changed quite significantly from when these tax cuts were first proposed. In 2019, the problem was, and had been for some years, that inflation was, if anything, too low. It had been below the bottom end of the Reserve Bank's 2 to 3% target for almost 5 years. Today, inflation is too high, and lots of people, almost everyone, are feeling the adverse effects of that. But the people who are most adversely affected by high inflation, increases in the cost of living and of many discretionary items, are people who don't earn very much, low and middle income earners, who were going either to get nothing out of stage 3 or were to get very little. And indeed, many of those people who were getting nothing or little were actually paying more tax now than they had been over the previous 2 or 3 years, because stage 2 of the Morrison government's tax cuts, that is the so-called low and middle income tax offset, only ran for 3 years, and once it expired, people who had been getting, in many cases, a little over $1,000 by way of a refund after they filed their tax returns were no longer getting that. That's one of the reasons why income tax payments as a percentage of personal income are now the highest that they have ever been. And I think the government had to do something about that. If it hadn't rejigged the tax cuts, it would have been under enormous pressure to deliver cost of living relief to lower income earners in some other way that might have added to inflationary pressure and perhaps prompted the Reserve Bank to put interest rates up. So although the government has broken a promise, and they may pay a political price for that, they have some good arguments to justify breaking the promise, and at a political level, they will no doubt be hammering the point that actually 11 out of 12 taxpayers are going to be better off as a result of these changes. And while 1 out of 12 taxpayers, that is people earning more than $150,000 a year, are going to be worse off than they thought they were going to be, there's probably not too many Labor voters in that cohort apart from the ones in the ACT.
The high-income earners, yes, who will now get less of a tax cut. Just to be clear, though, they are still getting a tax cut.
They will get a tax cut, that's right. And they will be getting bigger tax cuts than people on lower incomes. And while some people will say that's unfair, I think it's also important to make the point that people earning more than $180,000 a year represent about 3.7% of all taxpayers, but they pay 31% of all the income tax. Whereas at the other end of the scale, people earning less than $37,000 a year of taxable income represent about 21% of taxpayers, but they only pay 2.5% of total tax. If your tax changes are about changing tax rates, which is what stage 3 was all about, and what it's still about under the changes that the government is now proposing. It's actually very hard to do that without cutting the tax paid by the people who pay the most tax by the biggest amounts.
Yeah, which is what they're doing. But yes, you're right. It's this whole idea, though, of getting a tax cut in the first place for those high income earners, because the Greens want them scrapped altogether, stage 3. And there was talk of that, albeit Labor was pretty firm at the time of saying, no, we are going to keep them. And so they've thus modified them. But would it be going too far to scrap them altogether?
I think it would, and again, while there are going to be some people who disagree with what I'm about to say, the 180,000 threshold for the top rate of tax has been there since 2008. If it had been indexed for inflation, as tax thresholds are in some other countries like the United States, then that top tax threshold would now be $250,000, not $180,000. And the proportion of taxpayers who are now in the top tax bracket has risen from 2.7% in 2013-14 to 3.7% 2.9% in 2013-14 to 3.7% in 2019-20, which is the latest year for which the tax office has published data. That's actually quite a big increase in the proportion of people who find themselves in the top tax bracket. And the thing about that is that while 45% or 47% if you include the Medicare levy is not especially out of line with other countries that we normally compare ourselves, it's about the middle of the range of top tax rates among industrialised economies. It does cut in at what is, by international standards, a fairly low income by comparison with other countries. So, for example, in the UK, where the top tax rate, including their version of the Medicare levy, is about 46%, you don't start paying it until your income is £180,000, which is about $360,000. In the US, where if you include state and city income taxes, which most of them levy, the top tax rate is somewhere between 46% and 51% if you live in Los Angeles, but you don't start paying it as a single taxpayer until your taxable income is about $495,000 US dollars a year, which is about 600,000 Australian dollars a year. So while by Australian standards, 180,000 is a high income, as I say, only 3.5% or so of Australian taxpayers actually have taxable incomes of more than that. By international standards, we impose the top tax rate on fairly modest incomes. And what that kind of draws attention to me is that what the government's doing, although, as I say, I think there are good defensible reasons for doing it, isn't really tax reform. What it's doing is patching up, yet again, an income tax system that is increasingly not fit for purpose.
Yeah, because there'll still be a four-tier tax system.
That's right. And look, I'm not opposed to the idea of a progressive income tax system. I think it's right and proper that people on a higher income should pay not just more tax, but a bigger percentage of their income in tax than people on low incomes. And, that's been a more or less bipartisan view in most countries in the world for more than 100 years since income taxes were first invented as a way of raising government revenue. But the point I make is this, that although personal income tax payments as a percentage of personal income are the highest that they have ever been, total tax collections as a percentage of Australia's national income are still about a percentage point of GDP lower than they were at their peaks, ironically under the Howard government in 2001 and again in 2005 and 2006.
No, how interesting.
That's right. And that's despite the fact that the government is collecting an awful lot more revenue than they had expected from company tax because of very high commodity prices that mining companies are in turn paying the proper rate of company tax on. And what that highlights is that our overall tax system is actually full of holes. I mean, one example is the GST, which is not collecting nearly as much a proportion of our national income as it did in its first 5 or 6 years because consumer spending has been shifting away from things that are subject to the GST. Now, our GST of 10% is actually low by comparison with other countries who have GSTs. If you go anywhere in Western Europe, where governments play a much bigger role, including supporting people on low incomes and people with children and that sort of thing, the GST, or the VAT as they call it, is typically 20% or more. Most Western countries have much bigger payroll taxes than we do here, and employees pay them as well as employers. We are one of a minority of Western countries that don't tax inheritances. The UK and the US, whose tax systems we commonly compare ours with, they still have inheritance taxes. And that's worth noting because over the next 20 or 30 years, there are going to be enormous transfers of wealth from the baby boom generation.
You're going to die.
Yeah, and who've made a mozza out of the property boom, at the expense of their children and grandchildren. There's going to be huge transfers of wealth that at the moment will be untaxed before the baby boomers die off, a lot of other taxpayers' money is going to be spent on their aged care. Maybe we ought to consider reintroducing some kind of inheritance tax like the US and the UK and most other developed economies still have. And the other thing I'd say is that there is an awful lot of income, most of it earned by high-income earners, that isn't taxed at the same rate as wage and salary income is taxed. So, if you happen to be on a salary of $200,000 a year, you're going to be paying the top rate of tax on the bit that's above, well, it will be $190,000 now as a result of the changes. But if you earn the same amount of income from investments, from property investment, if you funnel it through a trust, if you earn it as a small business rather than a large business, you're actually paying less tax on that income than someone who's earning the same income in the form of wage and salaries. Is that right and fair? I would say no. So there is actually enormous scope for reforming the tax system rather than just fiddling around with tax rates and thresholds. Which is what they're doing
here, but the thing is they're too scared, Sol, as you know, it's politically.
And that, Fiona, that's the sad thing. But what I'd say about that is this: I don't criticise this government for not doing any significant tax reform this term because they didn't have a mandate for it. And the history is full of the lessons for governments who, having promised not to do things, then go and do them. Tony Abbott, Campbell Newman in Queensland, among others. But what I would say is history also tells us that no first-term federal government of either political persuasion has failed to get a second term since 1931, which was in the middle of the Great Depression. And what I would really hope is that between now and whenever the next election is held, in addition to defending the fact that they've broken this promise, the Prime Minister and the Treasurer and other ministers start to make the case for the sort of tax reforms that we're going to need if we're going to be able to pay for the health care and the aged care and the NDIS and the defence spending that we probably are going to have to undertake, as well as meet the interest on the debt we ran up during COVID. We're going to need to raise some more revenue to pay for that if we don't want to do it all through borrowing. And the government, I think, needs to articulate that case between now and the next election so that in their second term, which history says they are likely to get, they can actually do the things that need to be done. Sadly, I feel as though I've probably got a better chance of seeing a thylacine on my front lawn here in Tasmania than I am of the government actually doing that.
Well, they're giving it a go with the thylacine. Thank you, Sol, for joining us this morning. Big lesson for us there, Sol S. Lake, independent economist here on ABC Central Victoria.